Good evening and welcome to another edition of NCN's Business and Finance Outlook with yours truly, Joel Bhagwandin. Today I want to talk about a trending topic that is dominating all spheres of our society, all segments of the business community, and so on. And not just a popular or a trending topic and an important topic within our own country, but this is a global phenomenon, a global issue, and that is the rising cost of living situation. Now, recently there was a controversial headline carried by one of the local media houses where the journalist or the author of that article would have looked at the report in the latest Bank of Guyana report for the end of March 2022, the first quarter. And the report speaks to inflation and the projected inflation rate from that period and what that inflation rate would move to by the end of the year. And it was misconstrued by the author or the journalist that it means cost of living would double. But in order for cost of living to double, it really means that the cost of everything would go up by 100% and not just 4%. So it is important to understand that inflation measures price increases of a basket of commodities. Inflation, however, while it is an indicator of cost of living, it is not. There is a difference between cost of living and inflation. There is a difference between the cost of living index and inflation. Right? Both of which, inflation doesn't tell you everything about cost of living. It doesn't tell you a true picture of cost of living. And so that is important to understand. Inflation and cost of living is not necessarily the same thing, right? Even though it gives an indication in terms of price increases relative to a basket of commodities, basic food items, and so on. So in tonight's discussion, we will touch on some of the public debates that are out there surrounding this issue, as well as government measures domestically in response to rising cost of living. We will have a discussion as to whether these measures are adequate or not in the context of the resources available to the government. We'll put that into context, and we will conclude by talking about what does this mean for us. How could we, take advantage of what rising cost of living mean in terms of the measures, what we should do. So, simply put, those of you who are following this global phenomenon, rising cost of living, it started after the COVID-19 pandemic. Why did that contribute to it? Because it disrupted global supply chains, shipping costs went up globally, and there was a study that was done by the United Nations where it shows the cost of shipping for this part of the region, unfortunately, versus other parts of the world was significantly higher. Right? So that is one major contributor. The second is the war in between Russia and Ukraine. Ukraine and Russia contributed in terms of global commodity production a significant percentage. For example, wheat, 30% of the global production of wheat, and so on. Russia was a big exporter of energy as well, right? Natural gas and crude and so on. So essentially, or to put this simply, Taking it to elementary economics level or to the basics, you have a price increase when there is a shortage of supply. So it's demand and supply dynamics. When there is a shortage of supply and the demand for goods increase, prices would increase as a result of that shortage. So how do you bring down prices? For you to bring down prices, you have to increase on the supply side. You have to increase the production level. So what happened as a result of the pandemic, you had the entire world was in a shutdown phase more or less for about 1 year or more in some cases. Businesses were impacted, factories were shut down, some businesses went out of business, some factories closed down. And so that affected the global supply chain. There was a shortage of many commodities, many raw materials that feed into the final goods that we consume. And so that creation of shortage as a result of that created the price increases. So how do we counter this on a macro level? We got to increase production on the supply side, right? So we'll talk about what we're doing as a country, and we put that into some context historically to understand, how we could have mitigated these risks since 20 years ago, and that's the harsh reality, and we'll talk about that in a minute or two, right? So, having said all of that, the point I want to make, simply put, we have an increase in prices, rising prices, as a result of the shortages created on the supply side. Demand went up because following measures that were implemented in response of the COVID pandemic globally, health measures, and then on the economic side, countries had to reopen their economies so that people could go back to work, people could earn, we could start back the factories, we could start back the engine of production to generate back revenue, So because economies reopen, our economy is now, our country economy is fully reopened and so on, this naturally drive up the demand. The demand went up almost instantly, but the supply was not there to meet it. And we got to understand the supply to produce goods takes time. Take for example, let's take in our case, the sugar estates, right? We had a closure of few of our sugar estates. Now we can't just open the sugar estate tomorrow and start producing sugar the next day, right? So while economies reopen, we make a decision to reopen the economy fully next month. By the time you reopen the sugar estate, it will take months to start producing again, because it requires a lot of work. A lot of capital has to be injected and all of that. Now that's just to give an example to understand why it takes time for the supply, on the supply side, to match demand, so we could have at some point equilibrium price, have price stability once again, prices to come down once again. So we have to invest in the supply side, build out the production. So we'll talk about that. Let's look at the measures. This cost of living issue is not an overnight issue. It didn't happen last week. It didn't happen last month. The country and the whole world, have been challenged with this cost of living issue since last year, the post-pandemic period. And so there were measures that were implemented starting from even budget 2020, 2021 and 2022. You would recall that in budget 2020, for the period 2015 to 2020, under the previous administration, there were over 200 items that attracted taxes, VAT for example, that never attracted VAT for example before, right? And this include basic commodities that we consume, food items, basic things like electricity and water, attracted an additional cost that it never attracted before. VAT, 14% or 16, well, at that time 16%. So what the first budget of the current government sought to do was to reverse all those 200 plus new taxes, new items, including electricity and water, reverse it to pre-2015 levels. So that was the first thing. That measure alone, of that reversal of loan, of just that basket of 200 items with VAT alone, it cost an additional $60+ billion annually. And so the reversal of that measure to its pre-2015 level instantly put back 60 billion plus into the pockets of households, consumers, and into the cash flow for companies. Because imagine when companies, especially in the manufacturing sector, that electricity accounts for a high component of their cost of production. Imagine having to pay 14% to that. What would happen to the end product that a consumer, if the company can't absorb it, then they would have to pass on that extra cost to the consumer, right? So 2020 budget sought to reverse that, which the cost was over 60+ billion, right? That was tax burden that went back into the pockets and into the bank accounts of companies so that they could now be more competitive, invest more, create more employment and so forth by reducing their cost. Looking at the measures implemented now in budget 2021 and 2022 collectively, I want to go through it in a breakdown form, right? First, there was the excise taxes on fuel was reduced incrementally, not instantly, but incrementally. There was a reduction of 10% and 20%, then 0%. Excise tax on fuel was 50%. That was reduced to 0%. Now, what was the cost? That 50% excise tax, using 2020 actual figures, accounted for $20 billion in revenues for the government. So, by reducing that to 0%, the government has put back $20 billion plus to minimize the cost of the rising fuel. 2021 to 2022, that would have been 25 billion to 30 billion respectively. So in 2 years, that's $55 billion on fuel excise, that measure alone. Then electricity and water is another basic item, a monthly expense for a household. While we had rising costs in fuel, our electricity bill didn't increase and our water rates didn't increase. So what does that mean? It means obviously that those companies would incur a higher cost in production of the service for those two components. So it means the fact that there was no increase that was passed on to the consumer, the government had to subsidize these two entities. That between these two entities amounted to about $4.4 billion, $2.2 billion a year. Then another huge cost that went up significantly in excess of 200% was freight, shipping cost. This was during the pandemic period. And so what the government did in both budgets, they implemented a measure to revert the shipping cost to what it was, to the levels it was pre-pandemic, which was substantially lower. So that measure, which was extended in budget 2022, was another $6 billion annually. So that's $12 billion between 2021 and 2022. Now, because the shipping cost of itself went up so significantly. Even with these measures, we still have a relatively high cost, right? Then there was increase in the income tax threshold, which put another $3 to $4 billion in disposable income at the household level. Then you had collectively there are a number of cash grant initiatives, total cash grant initiatives, including for education purposes for students, amounted to in 2021 about 13 billion, 2022 17 billion. That's 30 billion for 2021 and 2022 collectively. Then 2022 had a $5 billion provision in addition to those measures. So altogether, the total, and we have to look at it 2021 plus 2022. Why? Because the measures implemented through 2020, the measures implemented through 2021 and 2022 is rolling over to benefit all the time. So we have to include that to have a holistic picture in terms of what is the cost, what is the value of these costs, of these measures implemented by the government of the day in response to rising cost of living. And so what is the result? What does the number look like? So for 2021, it's close to $100 billion. All these measures, when we quantify them, right, that I just described, quantifying those measures, it's about $100 billion for 2021. That is about 33% of the recurrent expenditure of the state, of government recurrent expenditure. In 2022, these measures amounted to approximately $128 billion. That represents about 38% of the recurrent expenditure of government. In terms of the tax revenues that the state collects, not oil revenues, tax and duties, it represented about 45% for 2022, 39% for 2021. Now, in terms of, there is a call or a notion, especially by the political opposition, that we should, and there is also this view as a result of that, there is this view by the general public that we have all this oil money sitting in the natural resource fund. Why are we not using this money to bring greater relief to our people? But here's the deal. When we look at all these measures for 2020 and 2020, remember, the 2022 budget is the first budget that the government is drawing down from the Natural Resource Fund. The aggregate measure, the collective measure, the total value for 2021 and 2022 of these measures amounted to $226.7 billion. Now that represents 178% of the Natural Resource Fund balance as of 2021. So what does that mean? It means the total value of the cost of living measures implemented by the government is represents more than the value of the oil money that we have up to 2021. 180%. 180% of that. Because we only have $127 billion sitting in the NRF fund, and these measures are amounted to $227 billion, right, between 2021 and 2022. So indirectly, we can say that the government has expended more than we have in the NRF fund in terms of cost of living measures to counteract, to bring relief, to cushion the effects. And this is a global phenomenon. Inflation for 2022 for Guyana is projected at 6 or 7%. The US inflation is projected to be 9%, close to 10% for 2022. So other countries, if we think we're having a bad impact, other countries are worse off than us. So with that context in mind, we have to understand and appreciate that this cost of living issue is not only a government problem, it is a national problem, it is a global problem, it is a global phenomenon. And therefore, all of us, not only the government has to do its part, and companies have to do their part, and individuals have to do their part. What does that mean? It means we have to adapt. We have to adapt. We have to make changes. We have to make adjustments to our lifestyle and simple things. So while there is a call for companies to pay better wages and so forth, I see some companies in the private sector giving reasonable increases to cater for cost of the inflation. This is also affecting the margins of companies. The cost is not only being felt in the pockets of individuals, but companies as well, because they have to incur costs for the same goods and commodities and raw materials that feed into their service and feed into their final product. So it eats away the margin of companies as well. That also has an impact in terms of what level of increase they could give to their employees. Right? So it means, I'm not saying that we should not have wage increases and salary increases, of course. But we have to understand that this is everybody's problem, and we all have to find solutions to these problems. We have to make adjustments to our lifestyle. More than half of the population reside in rural areas where you have reasonable spaces in our backyards and so forth. A simple thing as of having a kitchen garden could save a lot of money. And I can tell because I live in a household, I have a family, so I could relate to the expenses. We know how the cost for greens has increased. If you spend about $5,000 a week in greens alone, that's $20,000 a month. Now the last time we went to the market, it has gone up more than $5,000. Greens can't do anything. Okay? So imagine if you could save $20,000 or $30,000 just to buy greens alone by planting a kitchen garden. That's an example of something that you can do at an individual level to minimize your cost. And there's so many other little things, little changes that we can do to minimize cost. So there is things we can do to minimize cost. And then on the income side, some persons have looking for the opportunities. We're despite these challenges, the economy is picking up, the other sectors are picking up, there are lots of opportunities. And so actively seek opportunities to diversify our source of income, having multiple sources of income. So, and how do we do that? We can't do that if we don't invest in ourselves at the individual level. Because if we understand, we pay attention to where the economy is going, there's a whole range of new skill sets and competencies that are required for the market of the future, for the job market of the present and the future. And therefore we have to take advantage of all the programs and scholarships and grants and all these different programs to invest in building out the skills that are required, retool ourselves, enhance our skill set so that we could become more competitive in the job market. So that's on the job market side, to improve, so you can earn better wages and salaries eventually. Then there's so many entrepreneurial opportunities as well for those who want to, those budding entrepreneurs. So the point I'm getting at is, while rising cost of living is impacting all of us in an adverse way, it is an opportunity as well for the producer, for the farmer, because as I explained, in order for you to have price stability and to bring down price at an equilibrium level, the supply has to meet the demand, at least at supply equal to demand. That's where you get equilibrium. So we have to increase in our production level. This is time for farmers to produce more, get more land and produce more. This is time for people who's never been into farming to see farming not just as an activity, as a rural activity, but as a commercial activity, as an industrial activity to supply the market because prices are high. This is in the short term. The long term, what is the government doing to mitigate the region So for us to deal with this problem holistically, at least to contain these impacts of rising commodity prices, runaway inflation, we have to look at it at a regional level. So we are doing the right thing. We as a country, the government of the day is leading food security agenda regionally, energy security agenda regionally. And the thing is, the hard truth is such that back in 2005 under former President Dr. Barajagdeo, and now sitting Vice President, when he led that agriculture initiative, the region didn't take him seriously. Now the region is realizing that we need to take this seriously. Now, right? And so many things that as a country that should have been implemented 20 years ago, all these infrastructure that we're pushing aggressively to implement, hydro, energy, bridge, roads, highways, all these investment were supposed to happen 20 years ago in what was conceptualized already in the National Development Strategy of 1996. But because of many different challenges, political instability and all these other things, during these period disruptions, we could not have implemented these projects. Had they been implemented 20 years ago, today we would have been able to better mitigate this global phenomenon of rising cost of living. We would have been at a higher standard of living. Our per capita income would have been higher than 9,000 today. So, taking all of this into consideration, what we have to, my closing point I want to say to you, the viewers, pause, take a step back, look at where the country is heading, look at what the government is doing in terms of measures, and to some extent look at our history, political, social and economic history, and recognize, the faster we recognize as a people and as a country that we need to embrace where the country is heading, we need to support the government and all other stakeholders to achieve the goals we want to achieve the development that we're pursuing. The faster we recognize that and come on board with a solution-oriented mindset, problem-solving mindset versus complaining mindset versus, the negative side, the better it will be for us and our future, our children and generations to come. So with that, I thank you for joining us this evening for this discussion, and join me again next week for another edition. Good night, and thank you.